Hey, good morning, traders. This is the morning brief video. So I'm starting out with the VX futures here, and this is really a big tell. We've seen a lot of dips in the past in the markets, and a lot of times we'll go into short-term backwardation, and it's always been by the dip. But I do want to point out the structure of the VX futures is much worse this time than we've seen in a long time. And actually, we haven't seen the structure like this since the COVID crisis. So be very mindful of this. Uh, so basically, there's two terms used in VX futures as contango and backwardation. So basically, a normalized look on your VX futures is you have the smallest price is typically the front end of the curve as you're taking the theta time, uh, uh, the longer end of the curve is worth more money because you have the time, the theta element added into the price. Well, currently we are in what you're called, uh, we are not in contango. We are in what they're called backwardation all the way out to September. And so this basically says that the front end of the curve, there's so much risk and volatility that the risk premium is greater than that of the theta decay, and that's exactly what's going on. Okay, and uh, and that warns you that this high volatility environment is still priced out all the way through September of not resolving itself. So be very mindful of that. Other things that are happening here, June, July, uh, they're not really sure what's going to happen between those 2 months. Okay, and they're virtually pricing exactly the same. Some people were thinking that there's going to be a big resolution in in this tariff war thing, and so they're not. It's really the fact that July isn't getting a big premium suggests that there's a belief that things are going to settle down come July. And to be honest, remember, guys, the 3 month reprieve on the global tariffs, maybe that all goes away to nothingness. Okay. But we have to be mindful of that, what they're pricing in right here on the VX futures. Okay. And so there is a real risk in this market. And so we're seeing 30-40% exports cut from China to the U.S. And these shippers now are not shipping goods to the United States, which takes 4 to 5 weeks for that to actually hit the prices. So the end of May, we will be starting to see the impact of all the container ships not coming into U.S. ports, and that's probably going to our leading indicator will be the ports possibly having to lay off, additional workforces, east and west coast as fewer imports are coming into the U.S. And so basically by the end of this next month, we will start seeing signs of uh, far less imports coming into the United States, and that's going to give us a pretty good tell of how things are going to. And to right the ship, it's not like one of those things you can just flip a light switch and hey, guess what? It's all fixed. We'll be good. And like I said, it takes about 4 or 5 weeks for the ships to leave China, leave their ports to get to the United States. Not counting all the time it takes to get the goods and services onto those ships, produced and put on those ships and stuff. So it's really derailed the. It's a lot easier to stop production to put on ships than it is to start it back up again in most cases. So be very mindful of that, what's going on, and where we're going to see the biggest impact in the markets. Okay. Uh, oh yeah. Also, I did want to mention there's still a gap down here in the VX futures. We're back testing a major support area on the VX futures. We're coming into that early on this week. Okay. So that's another thing to be very mindful. There's a big critical area that we have not even uh, fully back tested yet. So be very mindful of that. What we really want to keep an eye on, that's our transports. Okay, so obviously they are not really participating real well with this big rally in the markets, but this will be one of our leading indicators as the imports are not coming in to the states. This here will likely get really hit, especially on the railroads, the ports. Those would be our leading indicators. Late May, early June, we'll start seeing some major changes right there. So be very mindful of that. This everything I'm seeing in the market right now, it's still cognizant of a dead cat bounce. So in my book, okay. So be very mindful of that. What's going on this morning, okay? Wheat's down the most this morning, which isn't a big deal on that. Going down through my things here, then I got the Russell. No. We got copper here. What was that? No, 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 no. I did copper earlier, but it's not showing up on my chart. Must have did a different one. So we got double top here on the copper. In commodities, that's what you want to see. You don't want to see trending. You want to see sideways consolidation. Okay. Uh, you really don't want to see commodities like copper and stuff. That's inflationary in the markets. You want to see sideways consolidation. Okay, in my opinion. Okay. Some things that I'm seeing here. Uh, we're inside of monthly value. Very easily. I think this is going to fail right here. So we had this breakout right here. This breakout right here. Let me go down here in a small time frame so you can see it. 2 hours. I did that out. Okay, guys. So what we got going on here on the copper, we have a breakout. So this is a slightly bullish signal for commodities, for copper. We came down. We failed this back test, and now we're back above that. Given the current climate, I would be looking for this to fail. We're into monthly resistance anyway. Value area high. This is monthly value area high, which I just showed you in the 1 hour time frame. Go back over here. That there, right there, is our monthly webs, monthly value area high. We're rejecting off of that. So I would be looking for this to fail. And that'd be, deflationary to see that fail. So definitely I want to keep this one on watch, see if that'll play out. Right now it is a bullish structure until it's not. So be very mindful of that. We're above the green. We want to see us to lose this green. So we're, on that copper. Okay. Russell on the ZNs here real quick. Similar situation. We're trying to do a range breakout. Okay. They're supporting those lows. So bottom line is we really need to lose Friday's lows to start thinking the tone is a little bit more negative than bullish. Okay, guys. So be very mindful of that going forward here on the Russell. Excuse me. But the structure is still constructive, double bottom, and it's holding critical support. So bottom line is the pre-market lows. We don't even want to really think about taking any shorts unless we lose pre-market lows here on the Russell. So be very mindful of that. And we're in we got our weekly webs up here. We're pretty much in equilibrium on the week to week. So if anything, the big money is still trying to decide which direction to take the market. Okay, guys. Now the yellow line right here, this is the point of control for market webs, and a lot of people get confused using market webs. Oh my God, that's a resistance or supply line. No, this is the point at which most big money managers they place their bets, either bullish or bearish, because this is where all the volume comes into the market. Okay, guys, they don't the big money managers, they're not trading at the extremes of ranges. They're trading at the meat of the ranges because that's where the big dollars are being traded. Okay, guys. So that's where you have to think about this. If you, as an individual investor, we're looking for the edges to look for a directional move, where the big money managers are looking for the meat of the volume to make big, they've planned out big sells or big buys that they've already sat down in meetings and decided what to do. And this is the area that we're currently trading at here on the Russell. So be very mindful of that. Going down in here, I just Bitcoins here on the down right now. We're holding that critical support this morning. Okay, we didn't even manage to get all the way back into that. Immediately, you notice the point of control, they have already this morning bounced right off that twice. This is a bullish structure, suggesting we're going to break higher. Go over here on the 2 hour, I guess. Yeah, 2 hour. So this is a bullish structure, especially when it bounces right off that. That suggests immediately that there was a big money order likely sitting right at that point of control. So anytime you see big bounces off the point of control, that suggests an institution, big institution buyer could be stepping up into the trade. Be very mindful of that. Other things that I got going on here. 1 second here. NQ. NQs, guys. Okay, guys. Excuse me, quick here. Similar situation here. We're breaking support. Okay, broke down, back tested, became new resistance, resistance. Came up through it. We back tested it. Okay, now it's turning into possibly new support. Ultimately, I'm looking for a move to around 20,000. And wouldn't you know it, around the 20,000 area on the NASDAQ, that's the 50-week SMA. 50-week SMA is right around the 20,000. And I do want to point out also, that's well within this week's expected market maker move. And remember, guys, last week it was over 160 points expected move for the S&Ps, and we went all the way to the bottom side, went all the way back to the upside. It was wild last week. Okay, this week we got 150 point, and 40% of the S&P is reporting earnings. Yes, 40%. It's one of the biggest weeks ever in history in the markets to report all in the same week. Okay, and it may be the biggest. So I just want to point that out. It is going to be something this week. But yeah, 20,000 is ultimately my target. I got a little oval right there. That's what I'm looking for. Okay. Coming down here on the percentage moves here. We got ESs here. Okay. Similar situation. 5,700. That's about where the weekly 50 SMA is. That's right at the market maker move high for the week. Okay. And that it's not that's why they're likely pricing in that kind of move in the market this week for the attempted back test of that. So be very mindful of that. What's going on here? Very good. The algos and stuff have built out this expected move into that potential 5,700 this week. It doesn't have to happen, but I'm just saying that's why these market makers are likely at that price point. Okay, so be very mindful of that. So we're coming out of this downtrend, potential downtrend here. So this became support. This was support that failed. Okay, it failed support here. Boom. We came up and we tried to bust above. We've already tried to break out above this and it failed once before. Okay, so we've already got one failure of this breakout. Okay, we failed here. We failed here. And so we might be in a trappy area. Okay, this is our critical breakout point. So basically we have to get over 55.60 and hold to actually confirm that we are starting to get longer term money buyers coming in. Some bigger money coming in. But 55.60 is really, really a critical area, which we have not proven that we have broken out of. So be very mindful of that. Okay. On the daily front, monthly webs, point out right here, guys, we still got a little gap above us here that has not been satisfied. Down here at the bottom of value area, low on the monthly. So we're still outside of the expected or the value area, monthly value area for the month of April. So we basically haven't spent any time into value for the month of April. So basically all the value that came from the prior month was completely negated. Okay. We came down, said we don't have anything to do with these higher prices. And we still have not even gotten back into that. Even after this massive rally into the markets, we have not gotten back into the where price should have been for the month. So it's really important to note that, and we're running out of days in the month to actually achieve that. So we have to be very mindful of that. Okay. And I can't remember the NQs, similar situation, I think. NQs have actually crossed back inside of last month's value. So we're showing a little bit more relative strength right here. So that's good. Okay. So that's constructive, potentially constructive right there. the fact that we've actually entered into the overlapping value from last month. So that is a somewhat positive and important to note here. I want to point out here. You see how the lows, we didn't even violate value there Friday. So be mindful of that. That is constructive in itself. So 19,350, we need that to be a critical hold now. 19,350 to be a critical hold for the NASDAQ going forward in this week's sessions. So we want to definitely keep that in the back of our mind. Okay. The YM is really looking like a head and shoulders until proven otherwise. We're right into the major back test. This is a major back test on the YM. So far, we have not been able to hold above it. Early on this morning, looks like we could possibly be rejecting that back test as well. So the YM is giving us a little bit more of a bearish signal early on this morning. So we're not coming in Monday morning, gapping above resistance and taking off to the moon. In fact, this is looking like a short. So be very mindful of this. This is potentially looking for an early short here in the YM. So be very mindful of that. Okay, but that is only 30 stocks. So we have to be mindful of that going forward here. Okay. Okay, early on here on our pre-market scans, looks like Tesla, the leveraged Tesla, is active this morning. So let's type Tesla in here real quick. Tesla this morning. Wow, look at that thing go here. So we're back up to 289 here this morning. This is a potential head and shoulders. Okay, the 285. So we're right into an area that has, we don't know if it's all clear yet. So we have gotten up above this prior high before, and it has failed. Let's see here, right there, the high on that was 291.85. 291.85 is acted as resistance before. So really important to keep an eye on this. And 292. You see how the volume profile just drops off right there? So we're getting into the very end of the bell curve on the monthly. So on the monthly WES, we're right at the top of monthly value area high. So we're going into March value area high here on Tesla. Potential March value area high. So be mindful of that. A very strong on the past 2 months. That it is showing a little bit of strength here. Boy, those are some wild price action. Another one I want to point out here, SMH, catching a little bit of bid this morning, right into the meat of the resistance. So I do want to point out here, most of these charts are into resistance, but I'm not seeing any charts breaking out. So we have to be very mindful of the fact, kicking off the new week after having a massive rally last week, and you're into resistance, but you're not breaking out. So, you have to lean more to the bearish side because the resistance has not broken out. So be very mindful of that in today's session. So really, so NVIDIA and Tesla. Okay, NVIDIA is actually under some pressure here, having trouble getting back into last month's value area. Okay, given that the sheer magnitude of fees which the government has placed on them, there is logic to say that they should not receive value in the prior months. The narrative has potentially changed here, so be very mindful of this. This quite frankly is an area that I'd be very careful about trying to take longs. MSTR is a breakout pattern, really nice looking chart pattern. And then along the same thing, Netflix still probably a breakout pattern. No, it's down a little bit this morning. So we had highs there Friday. This is still a constructive breakout pattern. But maybe it's long in the teeth here. I don't know, but it's still quite a constructive breakout pattern. Okay, that's all I got to say here, guys. But like I said, most of the stocks and indices are into resistance, and there isn't anything in the morning session that says that anything's breaking out. So That's a big tell, in my opinion, early on this morning.